Hello friends, namaste. Welcome all of you to my channel. आज को discussion friend is all about your inventory and that's the inventory valuations. Before moving to this topic, let me clarify about the first of all the what you mean by inventory. Once we say the inventory is the stock of goods which is basically held for production and the selling purpose, friends. Now it's one of the important component of the current assets. For when we say the trading concern, then we say the you are going to deal with the finished product. For example, let's see you are selling the books or accessory item, that is the finished product example. Similarly, when you are selling the automobile products, then that is called again the merchandise inventory or the finished goods, friends. Similarly, what about the manufacturing company? Manufacturing company like your Dabur Nepal, we say the Dabur in India, yeah, Unilever Nepal, they are different form of inventory, friend. Like your inventory could be raw materials, components, stores, work in progress, and the finished goods. Now the question is about why we need to hold the inventory. We could categorize the 3 points here. One is for the timely production, friends. If you are not able to produce the goods and services on the time, then what will happen? There will be the higher lead time. Here the lead time is the delivery time. The customer order your order to supply the product, but if you are not able to supply because of your late productions, then what will happen? We lose our potential customer, friends. Okay, then naturally your income positions would be reduced, friends. Next one is that your avoid uncertainty part. That's all about your when we produce, but because of some certain regions there might be disturbance in the, let's see, the demand. There would be the mismatch between the demand and supply chain, we say. So because of that reason we also hold inventory so that we could avoid the uncertainty, friends. Now third point is all about your economies of scale. Economies of scale is all about when we produce more quantity based on our demand, then what will happen? The cost of the product will go down, right? Even we use the cost accounting principle, that is the same. That term is known as your economies of scale, friends. Now next important concept is that is your cost of goods sold. Okay, now when you see the cost of goods sold, look at the, this is the beginning inventory. Yeah, we say the is the beginning inventory. Yeah, opening stock you can say. Then we add the net purchase of the merchandise. Okay, then once you add the beginning inventory and the purchase of merchandise, then that item is known as your cost of goods available for sale, friend. Now if you exclude the ending inventory means what? Which is still in stock, which has not been sold, friend, then that term is known as cost of goods sold. Similarly, we could illustrate simple example. Let's see the this is about your the partial income statement data. Now cost of goods sold is all about, as I explained here through the picture point. Now beginning stock for beginning inventory is the January 1st 2014 is $15,000, while the net purchase is nothing, that is your purchase minus purchase return and allowances and the purchase discount, that is the net purchase. Now transportation is all about your when you are purchasing the goods, then we have to bear the transportation cost, that is called transportation in, then that is your cost of goods purchased. Now cost of goods available for sale is the 78,000. Okay, this value and this value we add it. Now once we say deduct the ending inventory at the end of 31st 2020 your 14, then that is the 18,000. So is the 60,000 is our cost of goods sold, friend. Now important point is that the from let's see the accounting point of view, yeah, even in the financial point of view, if we are not able to rightly value the ending inventory, what will happen? For example, let's see if we wrongly overvalue the ending inventory, then that means instead of 18,000, if this is the 20,000, you value the ending inventory, then that will causes the lower cost of goods sold, friend. Okay, and because of lower cost of goods sold, then since from sales we deduct the cost of goods sold, that is your gross profit. Your gross profit will be, what will happen? If we say this is the 20,000 wrongly, that's a 2,000 is your you say the overstated ending inventory, then this will be the lower friend. Because of that reasons, there will be the higher gross profit. But important point is that we have to rightly value the ending inventory, friends, so that you could represent the true picture, you could flow the true picture of your financial status to your investors and overall stakeholders. Now let's move to the next part, that is as I explained earlier, that's beginning inventory plus purchase is called your goods cost of goods available for sale. Now once we exclude the this part, then that is called cost of goods sold. Now important point is that we have a basically two system of your inventory control system. We say one is the periodic system and the next one is the perpetual. Under periodic system, what we do, we value the ending inventory at the end of the period, end of the period, that is your closing accounting period. While under the perpetual basis, we continuously update the inventory system. Okay, when you are purchasing, then you add it. When you sell it, then finally we get the balance, that is called the perpetual. Today we are discussing the how we value the ending inventory by using the periodic system, friends. Now based on, let's see, we are given the this informations like beginning inventory is there, purchase information is there, then with different date. Important point is that, friends, when you value the ending inventory based on your periodic system, then we have to take the reference of most recent purchase data. Okay, now based on this question, look at this one, like we have a 590 ending stock is there. Now the question is about how we value the ending inventory and find the cost of goods sold using the periodic inventory system. So 590 is all about, when you look at the ending inventory value, the first one is the 290 and the 300. 300, the first recent date is the this one. Okay, that is the first, that is first 10 and 2019, and since we have a stock is the 590, so also you have to just 300, then remaining part is your 290, which rate is will be the 4. So your value of the ending inventory here 2960, friends. Now what about the cost of goods sold? Cost of goods sold, you say simply the cost of goods available for sale, that is we say the 11,150. Once you exclude this ending inventory, then that will provide you cost of goods sold, friend. Okay, similarly when we say you are going to estimate the ending inventory under the LIFO approach. LIFO approach, what we do, based on the same given information, we take the reference of the earlier purchase date, that is your beginning inventory, first 1/1/2019, that is your 500, and the remaining 90 we say. Okay, 500 is the for rate 5 and 90 is for 7, friends. Okay, then that is why we say is the 500 into 5 and the 90 is the, since this is the LIFO, last in first out under the periodic system, so this is the $3,130. Similarly, when once you say the total cost of goods available for sale, how much we have, the same value 11,150, then you less this 3,130, so that is why you would have a, this value is the cost of goods sold, friend. Now what about the under the weighted average cost? Under weighted average cost, we at first find the weighted average price, friend, that is your cost of goods available for sale divided by units available for sale. Like your, we have a, this is the this is your total cost of goods available for sale is 11,150 and total units available is the 1950. So you will have a rate is $5.72. Now if you multiply this value with your ending stock, that is 590, then that will provide you ending inventory value, friends. Okay, basically what we discussed today, mainly we discussed about the, there is a need of your value the ending inventory. Reason is that if we are not able to rightly value the ending inventory, what will happen? Then it will adversely affect our financial status of our company. If you overvalued ending inventory, again it will be the not the good situation. If you undervalued, again this is not the good situation. So we have to value the ending inventory overall, so that you could represent, yeah, flow the right informations to your stakeholder friends. Okay, these are the basic content that I would like to share today. If you like this content, please like and subscribe this channel, and please let me know the other issues of the inventory management that is basically it's more applicable to the manufacturing company, but at the same time it will be applicable to the trading company who hold the merchandise inventory. Okay, thank you all of you for watching this video. Please take care.